Welcome to the Swing Trading with Cycles channel. We're going to do an update on the broader markets today. We're going to look at the S&P, the QQQ, Nasdaq 100, and IWM, and the Dow. We'll look at the ETFs that represent all of those, although we'll look at the S&P cash. It's February 18th, 2023, and this is the daily chart of the S&P that we'll start with. And this has been quite the daily cycle. We rallied for 27 days, and it is now day 38. You can see this blue line here is a 10-day moving average. We're clearly below it. There was a point where this looked like it might be the DCL. Now we've clearly made an undercut low. And so we're getting into interesting territory. This could be our DCL, our daily cycle low. And then if you're new to the channel, welcome. Take a look at the pinned comment to get caught up, understand cycles. We know the market is going to be dominated by these Fed meetings plus CPI. And an easy way to kind of think about it is the Fed meeting happens every 6 weeks, right? Like it kind of seems almost like it's random, but it's not. It's just every 6 weeks. So our last one was the early February, so it makes sense that the next one is coming up in late March. And so let's draw some of these out here. So next one is March 21st to March 22nd, which means the meeting will happen on March 22nd. So we'll draw that for March 22nd, and then we'll do May 3rd. And then we'll do June 14th. You may have to squeeze it a little bit more here. June 14th. So we're not going to draw all of them, just giving us a sense of, the next, call it few months, right? So you can imagine a world where these are going to be important pivot points, either daily cycle highs or potentially daily cycle lows. This last Fed meeting that happened on February 2nd, now it didn't happen exactly on that day because the Fed meeting was actually February 1st, but notice that was a DCL, or excuse me, that was a daily cycle high. That's not a coincidence. Again, those are going to be important pivot points. So let's just say we either have our daily cycle low now or we're going to get it soon. Let's say we'll get it sometime next week. You could see the move into the next FOMC will be about 21 trading days from there. So you could see a world where we get our DCL and we get a rally for, call it around 20 trading days into the Fed meeting. And perhaps that causes your decline. And then from there, there's about, 25 to 30 trading days in between each Fed meeting. And so you see a world where you could kind of see a world where you move from DCL to DCH, that sort of thing. Not like a perfect move. And you also have to remember, in between these, you have CPI numbers and, Fed speakers, et cetera. There are going to be other things that are going to sort of jostlate the markets. But this is a good kind of rule of thumb to start thinking about. And so we're going to watch next week. All we really need is a move above the high of this day, which is 41.36.54. And this could be our DCL. And if it's not, it's probably close. And I would see a world where we could get a final move down to like here. Right. And let's look at the weekly chart because that's more telling. Because the question, the more important question is actually, are we getting a weekly cycle decline here, or is this like let's say that was our DCL on Friday? Well, does that mean that is now like are we now starting a weekly cycle decline? Or are we going to start another kind of series of higher lows? Now, if it was our DCL on Friday, then that does clearly open you up for something like, we did this, and then our next move being that, maybe a little pullback, right? Like you can imagine the DCLs become the higher lows, and this may have just been it. Or, right, like we get a little more of an extension next week. So something like that. Maybe go below this low here at, 40.15, call it. That would also kind of kiss the 10-day moving average, which would be interesting. But I'll take this line off. I mean, look at this thing. That's important to notice. And we talked about this on this channel multiple times. This may have been our major low, right? Back in October. This may have been it, right? Just as gold made its major low in September. Look at the pattern here. This is our downtrend since the top on January 4th. This is the S&P. The other indices actually topped in November, but that's besides the point. So you can see we had one leg down and then and let's draw with this. I think that'll make it get a nice big leg down. Only a 5-week rally for this weekly cycle, so very feeble, and then a big leg down, and then a more convincing rally. Actually even makes a higher high above a previous swing high, but only lasts 9 weeks, and then gives it all back. But not, it makes a new low. And then we come up here, everyone is like, oh my God, okay, it's over. We have the Fed meeting, look like a terrible sell signal, but we hold a higher low. And now what have we done? We've made a higher high, right? So if this is our DCL and we're off to the races, that would give us another higher low. That would be the second higher low of this, the rally off of this October low. More evidence that this may have been our major low, especially if you look at things like semiconductors. So it's important to, especially as everyone remains incredibly bearish, that's fuel to go higher. Notice these rallies were just petered out. There was no higher. I mean, obviously we had some small higher lows, but this is a real structure to it so far. Again, those Fed meetings are going to tell us a lot. Just structurally, though, it's been 2 inside weeks in a row, and we did make a new low. We did, like this week, made a new low below the previous week, but obviously we came and bounced back. So both weeks pretty doji-like, a lot of upper wick, more upper wick than lower wick, but generally kind of going nowhere. So this was week 18. The problem is at some point we are going to get a weekly cycle decline. And the expectation is that we would move below the 10-week moving average, which is down here at like 39.81. So if this isn't our weekly cycle decline and we keep rallying, like we do something like that, we're certainly going to come back at some point and have a deeper correction, even if this is our, that was our major low. And that's going to be important because everyone's going to be howling at the moon that this is it. I mean, if anything, people on Twitter are already saying the rally is over. This was a bear market rally. And it's like, really? But look at this. This hasn't really done anything yet. Now, again, this is a good short opportunity below these lows here, right, to come down to here. So, right, this is, again, that's 40.15. We're up here at 4,100. So that's a nice amount of downside, obviously. But you got to wait for the signal first. I mean, the way this thing is, like, these moves are not following through. That's important to note. Again, and that may be because we have a daily cycle low, so we're about to get a rally on the daily time frame. Obviously, that's not the time that you want to go short. And if we look at the monthly, this thing has been oscillating back and forth. Look at this candle. At one point it was red, at one point it was green. This is definitely ominous, though, right? Like you think about the bear case, right? The same way I drew that downtrend on the weekly. This is your monthly version, right? We're just filling that out potentially, right? Came down, chopped around a little bit. We could set up for something like that, right? That's what the bears are hoping for, although many of them don't understand price action, right? Now, of course, we could instead do something like that. Well, that's not going to allow me to turn it into an uptrend. Oh, maybe it will, right? Something like that. I know that's pretty ugly, but you get the picture. You got to be prepared for this move, right? And so let us look at the other indices. So, and we'll go through those relatively quicker because it's the same move, except the Dow has really diverged. That is looking ugly, sickly, really. So the Qs are similar position, except wait a second, not a similar position. Similar but different. This Friday's candle did not make a lower low below this one. That's bullish. That means this thing is holding up a little bit more. And that is actually what you want to see if we do have a bottom, that this thing, and the Qs have outperformed the S&P off of this bottom. This is your potential bottom in October. And obviously you can see the Qs almost gave it all back. They almost made a lower low. So this is actually almost like a double bottom. And you can see that on the weekly chart, right? Like, man, this was a scary one. It looked like this was going to make a new low below that, but it didn't. It held just where it needed to. And most importantly, I keep saying, like, notice, so this is a little bit less clean than the S&P nice higher low. I mean, this is a higher low, but just marginally. But notice, this is the December Fed meltdown. We're well above that level, and in fact, we stayed above it. We closed above it. And that's the same for the S&P. That's something to watch. That level is clearly something important structurally. And actually for the S&P, we're now back inside that range. Ooh, that's important. So the Qs are not, and IWM is not either. Let's go back to the Qs. So monthly chart, same kind of picture, except look at that. The monthly chart is actually still more green than the S&P, which is just kind of now basically just an upper wick essentially. But still, again, same kind of idea. We may have our potential. Like there's a bear case here if we roll over and this goes red. Important to know the Qs opened at 294. So below 294, the monthly candle goes red. But you can obviously see the bull case as well as we close out February. And same kind of idea for the weekly cycle. You know, we have that high on week 16. This is all just consolidation inside that candle. That low is 289. So that's important to be aware of. So the Qs are outperforming, and we'll look at a ratio chart which shows that, but you can see that here. It's starting to outperform. And man, look at the it's all the same pattern. Again, similar to the Qs. We did not make a lower low. We've just been moving higher since this low here. So that's that's interesting. That could be your daily cycle low for IWM. It's kind of telling you it's not. It's kind of holding in here. So this would be day 1, 2, 3, 4, 5. That's going to be really interesting. So this one is outperforming. We'll look at a ratio chart against this one as well. And on the weekly level, same idea, still an inside week, but this thing is pretty green versus its counterparts for the S&P. So again, IWM, at least is like just as recently as this week, doing really well, and also holding above that low here. This is your Fed meltdown low. We closed well above that. So if anything, this is actually looking more like a bull flag than anything else. So the long trade might be IWM. Monthly candle still needs some work, but the open was 191, so that's important to know. And finally, let's look at the Dow, which is the worst now. It used to be the best, but now it's the worst. And you can see we just made a new high, which was on day 35, but it's really just a double top of this high from day 14. So while this seems like, okay, it's pretty right translated, it's not. It's more complicated. And notice the last like 10 days have been inside the range of this big bearish, this big doji candle. So we threatened to break down. So this actually might be a false breakdown. Notice we wicked below it, and now we're moving higher. So that actually might portend some short-term upside here. And it's a similar picture to the other ones, but different in that, look at that. The Dow is actually still inside the range of that meltdown candle from December for the Fed meeting. So the Dow is the most bearish of the four, unequivocally. We're still inside the range while the other indices are above it. The S&P just broke inside the range. And so let's look at QQQ versus SPY to just kind of visualize that beautiful uptrend. Look at that. We clearly made a low on the weekly chart right at the beginning of the year, and we've been rallying for 1, 2, 3, 4 weeks. Was the top. We've consolidated these last 2 weeks, possibly for another move higher, and you can see how the 10-period moving average is moving higher. This is your big indicator that we may have a major bottom. Notice this rally that petered out, right? And again, this is a ratio chart, so this is telling you that QQQ is outperforming the S&P 500. That's bullish, and so we want to see this make this higher low and continue to move higher. And looking at it on the monthly chart, you can see same kind of idea. Looking like a major low here. This is your monthly swing low. Well, actually, to be clear, bullish outside monthly candle in January, and this is now follow through. So, but at the same time, is it possible that IWM is outperforming the Qs? Notice what I did there. And the answer is yes. Look at that. This is just as of the last couple of days. Look at that low. Ooh, that is nice. So Qs are the trade for right now. I mean, obviously you have to watch for a short-term reversal, but look at that. So we're 2 days into a new cycle is what that is. This whole thing was a cycle. It actually made a slight lower low, I think. Or no, more of a double bottom than anything else. And you can see it probably means the same thing on the weekly. So it's setting up for a swing low on the weekly chart. Again, double bottom here. So the IWM is the place to be because the Qs are outperforming the S&P and IWM is outperforming the Qs. But let's just see for the heck of it. IWM versus the S&P, same thing. Look at that. In this case, that was actually day 4. So we actually had our turning point earlier. And right, I think we looked at this ratio before. And you can see we've just been consolidating the last 3 weeks, possibly waiting for like an explosion to the upside. So IWM is the trade. at least between the four indices. And we can see obviously the Dow is the worst. So that's our update. We'll leave it at that. Thanks for watching.